couple of days ago, I was on YouTube and I happened to see this video that was all about the real estate market and why it was going to crash in 2021. Yesterday, I was on YouTube again and I saw a video giving every reason why the real estate market isn't going to crash in 2021. So, if you're out there as a buyer or seller, what are you supposed to believe? What in the world is it going to do? Hi, this is Andrew with the Andrew Smith team at eXp Realty. And, over the years, I have sometimes been called too optimistic in my forecasts. I've also been told I'm not optimistic enough. And so it really depends on who you're talking to and what information it is that they're looking at. But as a real estate professional, what I'm going to share with you today is I don't think it's my place to actually provide information to convince you of something, convince you that it's going to crash or convince you that it isn't going to crash. That's not why I'm here. That's not why I do these videos. That's not why I put this information out. I put this information out because, like I just mentioned, there's a lot of confusion out there. There's a lot of different opinions. And the bottom line is they're just opinions. Everyone's got an opinion, right? It doesn't make them right or wrong. They're just opinions because nobody knows for sure. Let's go back a year, right when the pandemic hit. The prediction was that the pandemic would devastate the real estate market. That's not what happened. 2020 ended up being one of the best years in real estate. So those predictions were all wrong, right? And because 2020 was such a boom year, so to speak, and prices went up and demand went through the roof, it's led these types of videos to start get produced again on, oh my gosh, it's a bubble, we're going to crash. So my role in this, though, is to kind of help you decimate this information, kind of make some sense of it, right? Not to convince you, but to educate you. Not one way or the other. It's not my opinion. I'm just going to share the information, right? So that with that information, you can make the best decision for you and your family on whether now is a good time to buy or sell a home. As ultimately, that's the only thing that matters to you, right? That you make the right decision for you. And if after taking in all of this information, you don't think now is a good time to buy, don't buy. Wait. If you think it is a good time to buy, buy. If you don't think it's a good time to sell, don't. Although if you did, that would help us out because we really need inventory. But I think you get where I'm coming from here. It's simply just the information, right? And one of the problems we all have now is that there's an overabundance of information available at our fingertips. But what's missing is the interpretation of that information and what it actually means. And if you've heard any of the videos or seen anything or read any of my blog posts over the last couple of months, you'll know that I've been saying that I don't think we are in a bubble. I don't see it yet. Does that mean I don't think at some point that this isn't going to slow down and prices could soften or come down a little bit? No, it doesn't mean that at all. It means as I sit here right now, based on all the information that we have available to us, the true definition of a bubble doesn't exist today. Could it a year from now? Sure, it could. Do I think even if it does, the market's going to crash? And when I say crash, let's understand 2008 was a crash. Home prices plummeted. The bottom fell out. Do I think we're in for that? No. Do I think that we will at some point in time see a correction? Yes. What goes up comes back down. Real estate runs in cycles just like everything else. Okay, but I don't buy into the fear mongering or, oh my gosh, you're never going to buy if you don't buy now. That's just all BS, to be honest with you. It doesn't do you any good, right? You need to make the decision that's right for you. Okay. With that in mind, though, I'm going to give you 6 pieces of information here today on why this is not 2008. Things are very different in the real estate market than they were in 2008. And I'm going to give you those reasons now. So, again, so that you can make the decision that's best for you. So, number one, let's talk mortgages. Mortgages today are a little bit more difficult to get than they were back in 2008. In 2008, there was a frenzy in the mortgage industry. There were creative loan programs going on like you wouldn't believe. No income, no asset, or no job, basically. Just write anything down, sign the document, you're good to go. Everything was based on credit score alone. For the most part, people have to put no money down. People had very little skin in the game. You could just buy a house, right? And then they got people in with all of these teaser rates, these ultra low rates, 1%, right? 1% will get you in. But then that mortgage adjusts, right? And so now all of a sudden, these people that couldn't afford the house in the first place, that are in the house, now have their mortgage payment go up and they can't afford it. So what are they going to do, right? And they couldn't sell it because they had no equity. They didn't have any money into it, right? They were all predicated on the fact that prices would just go up forever. So, number one, mortgage standards are nothing like that today. You actually have to qualify. What a novel concept that is. Okay, so one of the ways that they do this is they look at default risk in the mortgage market. Okay, default risk now is substantially lower than what is considered the reasonable lending standard. And if you want to go, I've got a link directly below to my actual blog, and I've got graphs that show all of this. This isn't my opinion. This is actually pulling this from several different sources. But again, with regards to mortgages, it's nothing like it was before. Number two, prices, even though they've gone up substantially in 2020, are not currently soaring out of control. I know that may come as a shock, and you're like, what on earth are you talking about? But it's true. Okay. If we go back to the 4 years that preceded the crash, right? The 4 years that preceded the downturn, nationally, home prices were going up 8.5 to nearly 13% a year, national average. I was in Southern California at that time, one of the worst hit markets. We were seeing 18, 20, 22% a year, no problem. Okay, but in the years prior to that crash nationally, home prices were going up at an accelerated rate. Okay, in the last 4 years, nationally, home prices have gone up 6%, 4.8, 4.7, and then last year the national average was 9.2. Okay, so a huge difference. Did some markets go up more than this? Absolutely. That's why all real estate is local. Okay, so you're going to see different market conditions in different areas, but overall, we don't have runaway price appreciation like we did consistently year over year over year over year. Okay, talk to me again at the end of 2021 and into 2022, and let's see where this price appreciation goes then. Most people are predicting that prices will not appreciate quite as fast this year. Now, also, it's important as a reference point to keep in mind that historical average annual appreciation is 3.8%. So when you take good markets, bad market, up, down, you average it all out going all the way back, 3.8% is the annual. When you run that trend line at 3.8% every year, every year, every year, and take it all the way out, we are just now approaching the trend line. We're just back to the trend line, which means the appreciation is where it should be in terms of home prices compared to what they would be at an historical average if the market always just appreciated at 3.8%. Number three, the number of homes for sale. Ask anybody shopping for a home right now, and they'll tell you how frustrated they are. There's nothing for sale. We do not have a surplus of homes on the market. We have a shortage. Okay, in the years leading up to the crash, we had a surplus of homes. The number of homes available kept going up. We went from a 4-month supply in 2004 to 5 months in 2005, over 6 months in 2006, and over 9 months in 2007 nationally. If we look at the last 4 years, we've gone from 4 months to 3.7 to 3 to 2.1. It's going down. The amount of inventory on the market has been falling 4 years in a row. In Frisco, Texas, where I am, in Prosper, Texas, the other market where I really work, we currently have a 2 week supply. 2 weeks, that's it. In Southern California, where my team also operates, just under a month. Okay. Out of all this, remember 6 months is considered balanced. So right before the crash, even though we had escalating home prices, we had escalating inventory. Doesn't make sense. When supply goes up, prices shouldn't go up with them. Right now, we have falling inventory. Supply is coming down, prices are going up. That's following a normal economic model. This is nothing like it was that last time through. Number 4, new construction does not make up the difference that we need in inventory right now. So new construction. If we go all the way back to 1970, on average, right around 1 million new homes, and I'm talking single family homes. So right around 1 million new homes a year are built. That is the average. In the 4 years leading up to the crash, we had 4 consecutive years in a row. Obviously, that's what consecutive years means, but record-setting number of homes built. Okay, since 2009, 2008, we haven't hit the average. 13 years in a row, we've been underbuilt. Okay, we haven't hit the average of the number of units completed annually going all the way back to 1970. What do you think the population's done since then? It's not falling. The number of new households being created is increasing. Millennials, which is the largest generation that we have, are just coming into their prime home buying years. So the requirement for the number of homes needed and the number of homes available, they're disproportionate. We're undersupplied nationally right now. Number 5, home prices have gone up, but homes are not too expensive to buy. I will give, and let me reiterate, home affordability and affordable housing are not the same thing. Go to the coast of California and the housing isn't affordable for the average person. Go into many inner cities, right? And it's difficult to find affordable housing for many segments of the population. That's completely understandable, and something needs to be done about that. But that's not the same as home affordability. Home affordability, what that's looking at is it's looking at the percent of median income needed to buy a median priced home. That's how it's calculated. Okay, now between 1985 and 2000, the amount of income needed to purchase a home was 21.2%. In 2006, it hit 25.4%. As of today, it's 14.9. It's substantially lower. And, Mark Fleming, he's the chief economist at First American, and he explained lower mortgage rates and rising incomes correspond with higher house prices as home buyers can't afford to borrow and buy more. If housing is appropriately valued, house buying power should equal or outpace the median sale price of a home. Looking back at the bubble years, house prices exceeded house buying power. But today, house buying power is nearly twice as high as the median sale price nationally. What he's basically saying is wages have also gone up. We've been having record low mortgage rates, which has made it to the point that the home prices can go up. It's not taking so much of someone's income in order to buy that house. All right. Number 6, people are equity rich, not tapped out. Here's what I mean. As I mentioned at the beginning of this, people were buying homes with no skin in the game. They were also refinancing homes at an incredible rate. And there's my assistant jumping back into frame. They were also refinancing homes at an incredible rate. If you look at 2005, 2006, and 2007, $824 billion was cashed out in refis. 824 billion. When the market did start to turn, prices flattened. What happened? Well, the interest rates were going up, so people couldn't do anything, right? They now couldn't sell because they owed more than the home was worth. It was a whirlpool. It was a problem that exacerbated itself. Okay, now if you look at 2018, 19, and 20, a total of 348 billion in cash was taken out of homes with regards to refis. That's a substantial difference. So with that in mind, if you look at it now, for all mortgaged homes in the United States, the average equity now stands at just over $190,000. So you may ask, what about all the foreclosures? What about all the homes in forbearance we heard about? Well, in excess of 50% of the homes that went into forbearance are now out of forbearance. Turns out they didn't need forbearance at all, and those loans are current, over half. Okay, if you actually look at the percentage of the homes that are truly in trouble and truly could be foreclosed on and come back, when you add that number of homes to the number of homes for sale in the country right now, it doesn't even equal the amount of inventory that was on the market this time last year. So chances are that supply would just be gobbled up. It's needed. So it's not necessarily going to cause the major problem that many people predict. Now, there I've just given you 6 reasons why things right now are completely different than they were before. Does that mean there's not trouble on the horizon? I'm not saying that. Does that mean everything's going to keep going the way it is right now for years to come? I'm not saying that either. I'm looking specifically at the real estate market. We've got other issues as a country to deal with. We're printing money like it's going out of style. Sometime that's got to be paid back. Something has to be going on. We've got to correct that. We've now got talk of a massive tax hike, right? There's other things economically that could impact the market, right? That are outside of specifically just real estate. But when people are making comparisons and saying this is exactly like before, the real estate market's about to crash, it's not like it was before. Now, based on this information I've just given you, is this the right time for you to buy a house? Only you can make that decision, right? But hopefully this gives you some information, right, in order to make the most informed decision that you can for you and your family, as that's the most important thing. And if you've got any other questions, have a specific situation you want to talk through in more detail, please reach out. I'm always happy to talk to you. Have a great week.